to take advantage of that. Now, unique achievement of the CFD industry. Okay, it's exactly what we are talking now, trading Forex and CFDs. In the fourth quarter of 2025, the contract for difference CFDs industry recorded impressive result with a particularly notable increase in the number of active accounts despite the unexpected nature of the final quarter's growth. Experts are evaluating the industry's potential for the coming years. So it means that more and more people are now going into the capital markets to try to make money. That's very simple explanation of what that really means. I mean, like you now, for example, watching this because you are interested, or maybe you're already trading, or you want to start trading on Forex and CFDs. And as you may see, okay, according to the statistics, more and more people now, okay, having the same desire. They're having the same desire to open their account and to start approaching the market, because that basically seems to be one of the reasons and one of the ways that you can possibly make money, right? It's like extra money, let's put it that way. So signs that the war in Iran will start on Saturday, you can see on Friday, and you could take advantage of that. So you could buy gold, silver, oil, or gas on Friday, and by Monday, their price skyrocketed. Okay. So like I said, when you know that something is about to happen, or let's say, okay, that tensions that the war in Iran will happen. Okay. It was coming there. It was not like in one day. So if you would be there, let's say, following it and understanding that it's okay, it's more or less coming, and it's almost there, right? All these ships already basically came to the Iranian shores, okay? So, I mean, the warships of US and stuff. So it was coming there. And of course, if you think, let's say, a step in advance, okay, forward and looking forward, that's where you go and you buy something when it's cheap, and then the prices, as we just check together, on oil, okay, skyrocketed, on gas and stuff, okay, on silver. So now moving forward, okay, this is also something like I mentioned before in the beginning of this video, right? Trading signals. So you can see trading signals based on technical analysis with an explanation of why, okay, they're expecting to go up and down. Euro NZD, sell now at this specific price, take profit, stop loss, also pointing there. So if you wish to start trading, if you want to take some signals, reliable signals, by the way, because it's not just the signals that I'm posting there, I'm also posting the outcome of the signals, so that you always know the accuracy, how good they are. You will check that later. I'm posting that on my Telegram as well. But what I'm trying to explain now is that if you wish to start trading, if you wish to make money right away, okay, you can take advantage of that by joining my Telegram again, and you can get access to that signals as well. So you can basically receive a signal, open your trade, set it up to run automatically with your take profit and stop loss, and of course leave it there until it closes. Okay, now moving forward, one of my videos, okay, on the on Telegram as well. Okay, now we go to the aluminum, something that we checked just now. The price of aluminum has exceeded 3,400 per ton for the first time since 2022, according to the London Metal Exchange. And again, not just because aluminum increased, but this is again the trading opportunity. Recommendation: consider long bullish, meaning buy positions on aluminum futures, okay, or the global X aluminum ETF, exchange traded fund, that follows aluminum companies. Now, and also the break above the key 3,400 level signals strong upward momentum, likely driven by supply concerns, Middle East conflict, energy cost, and increasing industrial demand. So a sustained rally could target the next resistance near to 3,600, 3,800. So if we go back now, okay, to the if we go back now to the price of aluminum now, let me just quickly go back with you to the aluminum. Look, the price is now at $3,400. You see, $3,400 at this point, 454. Okay, now the potential, as they say, is that it can go to 3,800. So it can still continue going higher, just so that you understand. All right. Now let's move forward with my Telegram. Okay. You see, this is something hilarious. 50-year-old beggar found to own 3 houses, vehicles, and businesses. A man amassed a huge fortune by begging. A 50-year-old resident of India spent many years begging at the market, pretending to be helpless, invalid, and moving around on a wooden platform with wheels. Okay, this is just so you understand, okay, who this person is. Now, this aroused pity, and people willingly gave him money. When he was removed from the streets during an anti-begging campaign, the unexpected was revealed. He was earning several $1,000s a month, lending money to traders at the interest, owned free properties, including a three-story house and an apartment, and had several types of vehicle for rent and a personal car with a driver. that's really crazy, isn't it? So some people work hard like like donkeys, trying to like put the notes together, and someone is doing that. That's really crazy. Okay, so that's really crazy. But let's move forward. Europe's largest asset manager, Amundi, has announced it will reduce its investments in the U.S. over the next couple of years. So why it matters? Significant player, Amundi manages over $2 trillion in assets. A strategic shift by such a large European firm is a notable signal for global capital flows. So potential reasons, analysts suggest such moves could be driven by concerns over the U.S. fiscal policy, persistent inflation, stretched valuations, or geopolitical tensions, promoting diversification toward European or emerging markets. So impact on the USD assets, okay, or assets that are connected to the US dollar, a sustained reduction in foreign investment. I mean that a sustained reduction in investing in the US, okay, in general, or a US asset, could extend downward trend pressure on the dollar and the potentially impact treasury yields and stock valuation. So for the detailed rationale and the specific plans for the Amundi, I recommend trying to assess the article directly, or checking the final news, right, summaries that cover the report, just to get into the report more detail if you're more interested to that. But just to give you the simple explanation on that, once you learn that, so, the biggest investors that usually been investing trillions of dollars into the US economy now are not doing that and pulling out, it means that they're taking that money off the US economy. So they don't now basically believe more in the US economy itself. And this is just one of the, let's say, signs that may be giving you an idea that at some point, they're coming out of the U.S. Economy, because the U.S. economy is not performing well and may go to stagnate at some point. That may lead to a financial crisis that will inevitable anyway. It's just a matter of time. So look, also on my Telegram channel, you get sometimes have a thought of the day. So look at this one. Financial freedom is built not on income, but on the difference between income and expense. Okay, so of course we all have some sort of income, some, okay, people don't. But again, when you have some income, you have expense. So if you are able to increase the gap, and you will have the room for peace and growth. So of course, if you spend less than you earn, okay, and of course you're able to save, and that savings will play a very good role for you if you're doing that, let's say, for the long run and stuff. Now, moving forward, okay, so again, the start of 6th of March, okay, what happened to the 6th of March, okay, dollar index, you see, was at 98. That's how the dollar index was performing. Now it's something that we just check now. Bitcoin approached a key barrier. So those that have interest in Bitcoin, they also, like I said, have recommendations about Bitcoin, where to go, you see. And then again, some more signals for the day, okay, regarding GBP Canadian buy now, Australian dollar Canadian sell now. Okay, again, some information about Bitcoin at that day, some signals, right? And then demand for Japanese government bonds at auctions remains extremely weak. So yields of 10 years bonds have risen to their highest level since 1999. Reasons for the sell-off. According to the recent analysis, the surge in Japanese bond yields to levels unseen in decades is driven by several key factors, right? Fiscal fears, Bank of Japan scaling back Action results, inflation, yen. Okay, so basically, weak 10 years demand. The latest auction bonds showed demand below 12 months average. Strong 30 years demand. Okay, so basically the volatility in Japan, right? Just go to the contents, because like I said, I'm just providing that on the daily basis. But to read all that, let's say on this session is going to take us hours and hours. So like I said, if you just subscribe to my Telegram channel, you're going to be in a position to read that analytical information that will give you an idea to know where the Japanese yen and Japanese, let's say, stocks are going to go, let's say, right? Should you just follow that news. Google begins gigantic bond placement, right? So they are placing also bonds, meaning that they are borrowing a lot of money. They need money to keep expanding. AI adoption raised by countries. It's also like some sort of analytical information with the AI, countries that's using AI right now. Okay, so you can also see that out of curiosity to see which countries are more developed in AI. Okay, 100 major public companies now hold more than million Bitcoins on their balance sheets. Now, remember that was in 2025. There was a huge hype around different companies that were buying Bitcoins on their balances. So they were investing a lot of money in Bitcoin, basically hoping that is going to increase in value a lot. So all these companies are in a very bad situation because Bitcoin dropped down, right, and lost half of its value. They've been buying when it was above 100,000. So now the price at about 65,000, that was hovering. So basically, a lot of companies now, because of that, are in a bad situation. So now we look at the number of the new job created, so-called NFP report. So non-farm payroll report comes out every first Friday, once a month. All right, of every month, every first Friday. And the last one was showing 92,000 people found new jobs, which was very weak report. Okay. And what is basically that means that the dollar probably gone down a lot, because when this type of reports come out, okay, there's a lot of movements happen right away in the same second in the market. But we're gonna basically check that on one of my video on live session. That's why I want you to really subscribe now, how the market reacts on different type of reports, because there's a lot of reports coming, as I was showing you previously, every single day. Okay, and every single day on the markets. Okay, and what basically is important is that all these reports create volatility, movements up and down, okay, which move in seconds and stuff. So once you know what report is coming, you can take advantage of that either before the report or maybe even after that. Now, moving forward, here I was also pasting some videos about unexpected source of income, okay, with the guy that recorded just how the fireplace, okay, his fireplace basically for 10 hours, and is making about like $200,000 per year just with one video for the last almost 10 years. Now, the US market crashed amid Middle East conflict. So look at the outcome of this type of conflicts. Okay, so of course, the whole stock market gone down. Now, why the stock market goes down when, let's say, a conflict or a war starts to go down? And you see, it lost basically 800 billion in matter of minutes as panic wept through the trading floors. You see, so because of the market, okay, consists of people, right, investors, right, people that also have their own gut, okay, feeling, people that obviously are responsible for their capital, all right. When you see something like a conflict starts, it's a lot of uncertainty of what's going to happening next, right? What will be happening next? Because U.S. now is involved in that conflict. Okay, will that conflict escalate into something big, into Third World War? Okay, and will the economy of the U.S. sustain the, let's say, the outcome of this conflict later? Of course, investors don't know all that, so that's why they're trying to pull out their capital. They start selling stocks. They're starting pulling out from their investments. Okay, so that's why the whole stock market, you can see, was in red. Okay, because basically a lot of capital was taken back out of the stock market. Right. That's basically, again, trading recommendation. When that happens, what you can basically do in order for you to take advantage of that. Now, 7th of March, okay, 7th of March, Goldman Sachs forecast the U.S. economy to grow by 2.9% this year, above the consensus forecast of 2.4%. 2.9% is very pretty much questionable now because of the situation that we already know what happened. So that was, as I said, 7 of the March, but now we know that the situation changed so much so that obviously there might not be growth, any growth at all. Okay, because of the huge prices for energy now and inflation increase. Now, the Tether now is 17th largest holder of the US government debt in the world. So Tether is the USDT cryptocurrency. Okay, so this is the emittent, right, the issuer of the Tether. So they are buying a lot of the US debts. Okay, so they invest a lot. Now, one of the cost of living has increased significantly. Another video that I posted regarding how the cost of living, right, has increased over the years from 1925 until our times, okay, versus the the prices for housing. Okay, now assets below their highs in percentages. So you see, if you look at the latest, let's say, highest percentages, you see companies, right? You see companies that dropped down a lot, 19% for Facebook, Meta, 21% for Tesla. Now, why this is important? Okay, in the market, they say whatever goes down a lot has to go up, and whatever goes up a lot has to go down. So you see all that, let's say, companies drop down in value, not because they're bad or not because they're doing bad business. They drop down because of the tensions, because of the uncertainty in the market. So when the tensions ease and when the uncertainty stops, okay, that's why these companies have a very good potential to go back in value. And that's what they did. If you check them, let's say, on the graph, let's say, for the last 10 years, for example, you will see that whenever they drop down because of a world crisis, let's say, because of the, let's say, COVID-19, because of any other war, okay, they drop down, but any drop in this type of companies, especially like Amazon, like Nvidia, like Google, creates a buying opportunity to buy them later, okay, from the low. Now, then we'll go next. We'll go later. Okay, that's another video, 1 week of war, how markets reacted. So after 1 week of war, very important. It's also, this video is on my YouTube channel. So subscribe on my YouTube channel, and then you will see the overview of the market after 1 week. So you can see the markets, how the market reacted after 1 week, after 2 weeks, after 3 weeks. And now we're talking about 1 month today. That's how much basically time passed since the war started. Okay, already 1 month, exactly 1 month, right, since the war started. So if you follow, like I said, my YouTube channel, okay, and my Telegram channel, you will never miss that. So by following that all the time, let's say by following the news, and that's where majority of people lack, let's say, they lack following the news. Because let's say a lot of people work through the day, so they don't have access to, let's say, working and for watching the news all the time. So when they approach the market, then they see the market, and they see the price in the present moment, but they don't understand what news brought the price to that moment. So this is why I'm telling you to subscribe to my Telegram and also my YouTube channel. I'm, by the way, on all the social medias, okay, on Facebook, on Instagram, okay, on LinkedIn, anywhere you go, you will find my academy, okay, you subscribe there, okay, whatever you feel it's easier for you to access, and you get the information over there as well, okay, so always crucial, always important, no hype, just the most valuable information that creates opportunities in the market, okay, so just go to and subscribe now so that you don't forget to do it later, right, okay, moving forward. Okay, we're going forward, right? Markets rate is rapidly expanding. 60% of S&P stocks have now outpaced the index itself. Okay, so it's just another analytical review there. You see 1 week of war, how markets reacted and what traders should watch next. Like I said, I'm observing the markets and I'm giving recommendations on what to be expecting, where the market is expected to go on different assets, so that you can take advantage of that and possibly make money, because that's the whole reason for you to have basically the trading account. And this is the only reason for you to watch this video.